Hi, my name is Bianca Lopes, and I'm the co-founder of Eyal and board member of Open Banking Week. In today's Open Talks, I have the Mr. Open Banking, all the way from Canada. He's the head of Open Banking at Axway, one of our proud supporters to build an open community. Eyal, welcome.
Great to be here, Bianca. Thank you for having me.
You're always the one in the interviewing side on your podcast and a lot of the things that you do. So today, tables are turned and I get to ask you questions about some of the underlying changes that are required for open banking to go from a bit of a promise into an actual reality. So we all know that the word APIs, application interface, that has been around since the 80s, but people talk about it as if it was something new. You and I share the techiness in common. And how are you looking at how are these API calls and standards paving the way to actually enable communication, to actually enable data extraction? We've seen this happen in Europe where kind of since PSD2, there's been a lack of standardization in some of the APIs. How are you building an open API strategy at Axway to really connect this finance world?
Great opening question, because it allows us to set the stage a little bit around APIs, what they are, one of my favorite topics. Like you said, APIs have been around for a long, long time. I spent a good couple of nights purposefully digging through the history, and they actually go back to the 60s. The earliest mention goes back to computer labs. I know, it's nuts, right? In the 1960s. And
I thought it was in the 80s that this thing actually took off.
So in the 60s, you would have had to have been in one of the 5 computer labs around the world to actually have remotely heard the term. And even then, it's a bit of a minefield trying to figure out when it was first used, who first used it. But it seems to be there were some papers passed around in these labs in the 60s that used this term. And then in the 70s, it became a little more official, but still very much in technical circles. And then in the 80s, it really exploded with the rise of the PC and common operating systems and Windows and so on. So it's a unique term in that it has been around for so long, since essentially the dawn of computing, and it hasn't varied in meaning or term. So what does it mean? Application programming interface. The layman definition that I like to use is glue. To me, that's very intuitive. Everyone understands it. Think of it as the glue that allows different pieces of software to stick together and do stuff together. So if you have an accounting package and an invoicing package, you can stick them together, and now you can do both accounting and invoicing and share the data between those two systems. The slightly more technical definition of API is a contract. It's essentially an agreement between those two pieces of software that says, if I give you this input data, you're going to give me back this output data. That's what an API is, and it's always been that. And folks who, to your point, treat it like some sort of new thing haven't done their homework. It's been around forever. So what's changed? What really has made the term so hot right now and so, in and driving the future? Well, a big part is the addition of that word, open. What's the difference between an open API and just a regular old API? I want to point out that the standard doesn't matter. People will get all caught up about GraphQL and JSON and REST, and so none of that fundamentally matters. An API is an API, and yeah, those things add improvements, but what an API does never changes. Open does fundamentally add a new quality to it, though. Before the idea of open APIs, APIs were considered proprietary things that you had to specifically learn if you wanted to speak to some piece of software. So you'd have to crack open the manual, hopefully digital at some point in the 80s or 90s, and learn this arcane command set that whoever had written the piece of software had published for you to be able to speak to it. And you needed special security permission. And in the context of someone like a bank or a large organization, it's a special project. Like you have to have special people who are going to learn this API and so on. The notion of an open API is a little different. And it's really only shown up in the last decade or so. An open API is an API that you're going to put on some public forum, like portal and say, hey, developers, come use this. You don't have to have a special contract with me. You don't have to have some sort of special credentials or security permissions. I am just putting this API out there for anyone to come and use. Now, obviously, this idea really came into its own with the rise of the internet. And the most popular open API is, well, let's say one of the most popular, but maybe the single most popular example, because everyday people run into it every single day, is Google Maps. So one of the first open APIs to show up was Google taking their Maps feature and saying, hey, everybody, if you want maps, come and get them. Here is an API that you can come and use to display maps inside your websites and apps. And we're not really going to charge you for it in any serious way. And we certainly don't need any sort of special arrangement with you. We want you to come use it so that we can grow the base of developers who are using our API to build amazing new things. Today, there are literally hundreds of thousands of APIs all over the internet, of open APIs that anyone can go and use today to build amazing new things. So open APIs really are in many ways what led to the modern internet. When you think about the rise of the smartphone, for example, there's a famous story that says Steve Jobs didn't want to have an app store in the original iPhone. He thought Apple could make everything and all the apps you would ever need are inside the iPhone. And had to be convinced that you got to open this up. You've got to allow developers to come and build things on your platform. You've got to go open. And ultimately, that's what happened. It's worth mentioning, even folks like BlackBerry had a lot of this open community stuff. But once the smartphone on the back of the iPhone came into its own, that's when the API economy as we know it really came to be. And it was on the back of platforms that published open APIs that allowed developers to come and build on them and create that ecosystem. That's why we have the modern internet and modern smartphone ecosystem today.
I'm a huge proponent. I love your explanation. I think for everybody out there, this is so on brand with how you and I feel about technology and breaking down the jargon and putting things a little bit into context. And time is a great way of doing that. And examples like Google Maps kind of bring it home to everybody to go, that's how that works. Uber uses it. I get it now, right? Is enabling kind of the fundamental pieces so people can build interesting things, innovation can happen. In a world of open finance, which is our topic over here as a starting point in the path to open data, which is what I believe in, and I know you share the sentiment of the opportunity, has not been traditionally a very open industry for lots of reasons. I think some that are super valid in terms of regulatory standards and protection and upholding people's valuable assets and possessions as they used to be money. As things get more digitized, we all know that this one day won't be selling you a pen, that this could be selling you an NFT. And now here we are digitizing all this stuff and putting it into a financial ecosystem. So could and would open APIs be the path to potentially innovate for financial institutions? Can the concept be extracted to say, hey, maybe I don't know how to build all the apps like Steve Jobs, but I'm going to open up this piece of information to actually provide value to my client or a service to my client, like you mentioned, accounting, that perhaps wasn't my core expertise and competence. How do you see this kind of space being able to potentially be a path, not to fear, but to true innovation and legacy in financial institutions?
Another great question. Let's break it down a little bit.
Let's do it.
APIs have been the pathway for banks to extend their capabilities since the 60s, since they introduced banking systems. The idea
there was just kind of some weird machines talking to some weird machines, and we just didn't know about it.
Drives and I've got to pick up the magnetic tape drive and hang it on this mainframe over here, and it's the one computer for the whole bank. But you know what? Even back then, banks used APIs to connect their accounting system to a tax system. In fact, these were some of the very first commercial software systems that existed. These are the systems that built the IBMs of the world. Still used APIs. So this idea of banks are going to use APIs to extend their capabilities is as old as banking technology. Not quite as old as banking, but you could go abstract.
Maybe not
Um,
cobalt, like
yeah,
a little bit before
yeah, that's right.
or
Time,
around it,
disk
actually.
drives, punch cards, right? Those things had APIs. People have to understand how old this notion is. It's fundamental to all of computing. So this idea of banks extending their capabilities that way is not new. We hit on what is new in your first question, open APIs. That's new. This idea that banks are not just going to use APIs in closed proprietary ways where they're going to have a special project to deal with Salesforce or with Google or with Quicken or whoever it happens to be. That's closed. It doesn't matter how cool your partner is. It doesn't matter if it's Google and now automatically you're like a cool kid doing cool APIs. If you had a special project and a special team with special security to figure out how to use that API and how they can use yours, that is not open APIs. Open APIs is when you just sort of put it out there. Now, when you sort of put it out there, that requires a different mode of thinking on behalf of the banks. And in my opinion, what's stopping them from truly innovating is this mindset shift. It's not a technology issue. APIs these days are very good. They're very easy to publish. They're very easy to use. Developers know how to do magical things with them. But if the business that is publishing those open APIs hasn't really shifted to that open mindset, then they're constantly going to be at odds with themselves, sort of their own worst enemy, because you'll start to put out these APIs, but rather than really embrace third-party developers who are going to come along and build amazing new things sight unseen, banks tend to default back to their classical mode of thinking, which is the walled garden. This idea that I want to sell each of my customers as many of my products as I can. I want to own as much of the customer relationship as I can. I want to keep them as close to my brand as I can. And any deviation from that, any shifting them away to some other brand or some competitor's products is a problem, is something to be avoided, is something to be controlled. Problem with that is in the modern world where everybody's running around with these things and has this absolute flood of choices coming at them, you can't be all things to all people. So this is my message to banks. You cannot be all things to all people. In boardroom terms, in the contest between putting the bank's brand and products first and being truly customer centric, which I know you're all talking about, you have to let customer centric win, even if what the customer needs may not be your products. Once you get to that mindset shift where you tear down the walled garden and accept that there's this whole ecosystem of financial tools and capabilities out there that the customer rightfully wants and deserves, now your whole impetus changes. Now it becomes, well, wait a minute, how do I embed myself into this ecosystem where I'm not going to be all things to all people, but I am going to provide certain critical facilities when they're needed. So you might be going about your life doing vacation planning or planning a wedding or trying to make a purchase of some cool new thing that just you want, a vintage guitar or an old hot rod or something. And the moment that you do need your bank, they show up. And then the moment you don't need them anymore, they disappear. And that's where this notion of embedded finance comes from. And it's starting to really take hold. I like that term because it represents that mindset shift, this movement from a world where you're trying to keep your customers in the walled garden, trying to control what they see, what they buy, to a world that tears those walls down and says, look, I'm here to help you take advantage of all the different tools that are out there. And that is only possible through open APIs.
There's so many great nuggets of things you said in there. So how do I break that down and respond? But I think more of a conversation. I think you touched on three things if I look at pillars that I think are really interesting to kind of dig a little bit further. The first one was saying, hey, this isn't really innovative. So how do you change your mindset more than anything else? But to counter it, working with so many banks, like you, I've heard across the globe that, but hey, some of this information is private, or some of this information, which is why a lot of the regulatory framework is around consent and around enabling clients to understand, hey, if I'm going to enable this piece of tech to talk to another piece of tech to provide me a value, I have to be aware of what's going on. I think a huge portion of that mindset shift is it's not only, I think, a protectionist thing, it's actually the challenge that I don't know what you think, but I don't think the average person knows what open banking is. And I often ponder if they should know, or if they should just live in a world where the world is open and nobody wakes up in the morning thinking, oh, my bank. Like, right? People wake up wanting things, wanting experiences, and wanting them to be facilitated by the speed of technological change and security that they keep hearing about and seeing in other aspects of their life. But I think that mindset shift it's so ingrained in some of the culture that you've talked about, how they've evolved from a wallet share, from a silo, from a product P&L, even the actual composition of a lot of the bank departments. I think it's an inhibitor, frankly, to that being a KPI, the way that they're measured on their quarterly share value price or their incentive structure is optimized for something that is not the reality of this changing world. I think it's just, what are we optimizing for? As you said, every bank will tell you the customer is the most important thing in the world. But like, do they actually look at their business model in that perspective? Do we look at, is it really customer centric? Am I really understanding? And I think that's where I get so fascinated about the world of identity and data, because then it becomes to me that you become a bit of a guardian, a facilitator, an enabler. And then it's okay to be in an ecosystem, because if you're the best enabler and you take care of me and you show me around all of these different options, then maybe I'll stay, because I'll be like, hey, you all is like the best at telling me all the things that are out there and giving me options to filter, to look. I even think consent will go to the extent that I should choose my authentication method. I should be able to choose. You should build enough of a modular architecture to allow clients to do what they want to do within, I guess, the safety and the boundaries of proper compliance and proper AML procedures, because we all are in the bigger fight towards financial crime than anything else. But when you look at this, why do you think we're still seeing such a challenge? Like the adoption and the notion of a bank really playing nice on the sandbox with everybody around, it's still not fully there. Is it still just the mentality? Is it the adoption issues? Is it the regulator? Like, who do we need? I know we need to push a lot of things, but if you were to kind of structure this order, where do you see the market?
Yeah. So a lot there. Great talking to you, because when
we share love for this industry.
Right,
by the way, the future of the event name is in the community is just open. We're just started with open banking because we first need to get some bases straight.
Well, at some point in the interview, we've got to get to this open data, open everything.
Exactly, open everything
because
within
it's
reason.
It's bigger than banking, right? I don't think there's any question about that. Something amazing is happening. And I like your focus on incentives. I think that's absolutely right. There is a lot of demonization of banks out there. I worked for a bank for 15 years. It's filled with really smart people who are nothing but well-intentioned generally. There's no malice there. There's no like, haha, I'm going to keep you in the walled garden because of some sort of evil or something. You are 100% right. That's what they're structured and incentivized to do. That's what their shareholders reward them for. That's what the KPIs that the executives are driven by point to, is sell more products per customer, increase the wallet share, and so on. And until those structures and incentives are changed, you're not really going to see much of a difference. Like, the machine is going to do what it was built to do. And that's why the role of regulators is so critical, in my opinion. they can act as a kind of spark. And in regions where open banking has started to take hold, that's what they've done. When effective, is they've said, look, we're not going to tell you how to do this exactly. We're just going to say you're on a timer and the goals that we expect you to achieve are X, because you guys have fallen behind the state of digital technology and consumer demands related to that digital technology. I mean, the fact is, banks should be embarrassed about the fact that when I want to order a coffee from Starbucks, I can do it with a couple of taps on my phone and it'll be ready waiting for me. But to move money from the blue bank to the red bank is like this 3-day process with a fee attached. And hopefully I can do it all from my phone if I'm lucky. That's crazy. Why is it the least important data has the most automation and features attached to it? Of course, security comes into play. At this point, you raised it yourself. A lot of banks will say, well, yeah, it's a coffee. You don't have to secure an order for a coffee. You don't have to secure a call to Maps. To them, I would say, okay, guys, let's be honest. These features that we're asking you to enable via your open APIs, consumers are using today. They use all sorts of features to be able to pull data out of your bank systems and show them. And you know, and I know that those systems are horribly inefficient and horribly insecure. The term you often hear is screen scraping. And you're not exactly taking those companies to court or shutting them out entirely. You're letting it happen. In the case of Canada, we have about 35 million population. 4 million people use one of these screen scraping based aggregator services on a daily basis. So consumers want these things. They are happening today, and they are happening incredibly insecurely with password sharing, with those passwords going to entities who are unregulated and doing God knows what with the data that they are gathering. They are essentially tricking the banks into thinking that they are users. And you all out there complaining about security are letting them do it every single day. So this whole argument that says, oh my gosh, I can't do this because it's insecure, it's a little hypocritical. If you aren't one of those banks, if you have someone saying never here, never screen scraping, we're never going to allow it at our bank, well then, how exactly are you going to meet these consumer demands? I assume you're going to adopt secure APIs. And if you've dug into those protocols, then you know that there are all sorts of hardened, proven mechanisms for securing the way that that data is exchanged, capturing the consent, to make sure you can trace somebody agreeing to have that data shared, and giving them mechanisms to keep track of everything they've consented to. I come back to the analogy. On the one hand, people will say, oh my gosh, it's insecure, there's no way to do this. But when I sign on to some service from a new mobile app I downloaded and it wants to use my Google data, it brings up this beautiful screen that says, do you agree to these 5 things that I'm going to take from your Google account? I never gave them my Google password. Clearly, all the control for that consent was passed to Google when I did it. This is stuff everybody sees on their cell phones every single day. All we're asking banks to do is catch up to that stuff that's proven, that people are familiar with. So if security is not the real reason, if these are just sort of excuses, what is the real reason? Other than, this incentives and so on, what is the real sort of objection here? It really does, in my opinion, come back to that shift in thinking, right? That understanding that you are moving to this ecosystem model, what can roughly be equated with the platformification of banking. Many smart banks all over the world already understand this. It's very closely related to this bank as a service concept, which in turn comes with, as you said, this acknowledgement of people don't wake up in the morning excited to do their banking. Like they just don't. They have to shift to this thinking of banks as enablers of other things. And that's the whole platform idea, right? Like what is banking as a platform, bank as a platform, bank as a service? I'm going to take what I offer as a bank, my capabilities, unbundle them, expose them as open APIs so others can come and build on top of them, extending my reach through those third parties and being part of this ecosystem that exists out there where customers can effectively assemble their financial services and indeed other services out of all of these options. Banks are there to provide that layer of commerce that allows all of that to happen. This ecosystem that we're building, nothing less than the digital economy of the 21st century. Just like the eras that came before, banks have to be the lifeblood. They have to be what they were in the 14th and 15th century Italy, where they invented entirely new methods of commerce. And on top of those new methods came innovation, art, modern civilization. That's where we are. We're at that same turning point where banks have to realize, look, if I just sort of take my hands off the wheel and rather than trying to keep everybody inside my church, for lack of a better word, let's see what happens when we kind of all get along. Now, at this point, I want to highlight the difference between open APIs, which we talked about, and open banking, because it does touch on the security question and really this bigger picture. Open APIs, as I said, are things you just put out there so people can come use them sight unseen. Very powerful. The problem is when you just have open APIs, every bank you go to may have those open APIs, may have a developer portal, but the APIs will be different on everybody's site. So if you want to get accounts from the red bank, you're going to call these APIs. And if you want to get accounts from the blue bank, you're going to call this sort of other set of APIs. Now, it's nice. I don't have to sit with them. I don't need a special contract, but I have to learn 2 APIs. And every bank, multiply that by the number of banks. That's where you get companies like Plaid, who show up and say, well, I'm going to integrate with all of these banks for you because it's a bit of a nightmare, the 1,000, 2,000, 5,000 of them. And then I'm going to publish an API on the other side so that you, developer, can call this one API and get all these banks. Brilliant. Thank you, Plaid. That's great, except for one thing. Shouldn't have been necessary. Why on earth didn't the banks just agree on an API and say, well, no matter which one of us you call, when you want an account, this is how you get an account? That's how the internet works. There was a time when that wasn't the case. I'm old enough to remember pre-internet, and pre-internet was a bunch of BBSs. BBSs, bulletin board services, were separate phone numbers that you would call with your modem and then sign in to this closed walled garden. Sound familiar? Where you would get all of your internet inside America Online. We all know how that story ended. When the internet established common standards for communication, for ultimately the display of web pages, the sending of email, the network effects that come with the establishment of common standards for the entire ecosystem absolutely crushed anybody who thought they could replicate that experience in a walled garden. That's what you're going to see happen in banking. The banks that don't understand what's happening are going to keep trying to have their customers stay inside that environment. And the banks that tear those walls down and understand what's happening are going to position themselves as the lifeblood of the 21st century economy. Open banking introduces common standards for that to happen. Just like the internet introduced common standards, open banking says, when you call for accounts, when you call for transactions, when you move money around, no matter which bank in the financial ecosystem you're dealing with, you do it in the same way using common APIs and common security mechanisms and common ways to capture consent. Once those standards are established, and we are living this right now, I mean, they are just at best in version 1.0 in a couple of regions. Once that stuff is in place, we're going to open the floodgates to a new world. Whether that world is positive, negative, that's sort of anyone's guess. But finance is being changed, and it's being changed forever. And that's all thanks to open APIs and ultimately open banking.
I couldn't agree more. That's a lovely rhetoric and speech around how you move from this. A few things that I'll jump on that really strike me to have a misunderstanding that I think are maybe some inhibitors around this is that when people talk about unbundling, and I think the first time I heard somebody say this was Bradley Leamer, I want to say 6 years ago. give or take, when I had done my first speech about identity and data being important. And I remember they put me in the like a really corner room. That's when you know your stuff is not like people don't get what you do yet. When you're like last day of the conference, the corner room, and you're starting to see that shift and that change in open banking and all these conversations. The first time I heard unbundling, and I've had several conversations with banks across the world around, okay, now we're going to build a platform. And you talked about banking as a service. One thing I struggle with, that maybe you can provide me some interesting thought, is they've taken it wrong. They think that that means they own the platform. And I've seen these ginormous IT programs, and we've seen enough, well, innovation theater, for lack of a better word, boys and their toys with saying, I'm innovating, look at it. And you like go through this, like, it feels like a mausoleum to me, because I'm looking at it being like, who gave you this money to do this? Like, why did you just pay me to do something more useful? Without any license to fail or culture. But a lot of these things are still under impression, like, okay, so then if I'm a platform, I control the platform, versus a true, and I think that's a huge ethos of this community here, and why we're so excited to have people like you having these discussions, and people across the globe to say, that's not what open means, guys. Like real open, like I know we're not bringing the conversation around like Bitcoin, Ethereum, and other things, but real open is not this centralized and controlled, and yours is a notion of how do we get to, and I think you're right, like open banking is getting us to having standards. I think we're still very far from all the things we need to build standards and facts for. So we can all agree that, hey, here's how this is measured. And I think a lot of that comes into the world of open finance, open data, which is how do we measure these outputs? If I'm getting this information, is the information I'm getting fundamentally the same, even though I'm calling the same API? What is the quality of that data? But I don't know. I agree with you. I don't know if people kind of realize this is happening. This isn't an innovation project. This is, for anybody out there listening, this is going on right now. There's a reason why we get excited and have changed our entire careers on joining organizations or starting organizations to say, this is not the future. This is the now. The future is going to look like fundamentally different at a speed that we can't even compute yet. How do you, I believe in, and I get excited for all this because I'm like, finally, technology enabling better humanity effectively. Inclusivity, ability to make cost a different story or a different structure.
Yeah, absolutely. To generate value in real ways rather than artificial ways that are based on opacity. So I completely agree. I don't think it's going to stop at banking. There's two things in your question that I wanted to touch on. So one was education, right? It's 100%. An interesting question whether people need to know. I like the way you put it. Do people even care? There are some of the smartest members of the open banking community out there who will disagree with me on this. They'll say they don't need to know. This is plumbing stuff. You and I need to know. The folks implementing it need to know. The regulators need to know. But average Joe on the street really does not care about this stuff, whether they can have APIs that let their banks talk to each other and consent. They just care about what the outcomes, right? Can they actually pull all their accounts in one place? Can they get a better deal?
Totally.
Now, of course, I agree with that. I think it's a good argument to say, look, don't, as a opponent of open banking, say, oh, consumers aren't ready for this. Of course, they want better deals and they want to see their accounts in one place. That's self-evident from the data. They're actually using the services. The question of education is, I think, a little different. Okay. I think that people should know. Okay. I think they should know and can know, because this has to do not just with their own betterment, which it does, more investment options, more savings options, less fees. To your point, it has to do with the betterment of all of us.
I agree.
Rather than everyone being stuck in this financial system that has remained unchanged effectively since APIs were introduced in the 60s.
Yeah.
there's something clearly happening on the other side. And I think consumers are being educated to that one way or the other. Every day, they see more and more articles about Bitcoin and Ethereum and now DeFi and NFTs and the rise of central bank digital currencies. But they aren't really given much context for how all of this is supposed to come together.
I know that's a show you and I should start, or another thing you
The
should
history.
do, because it's totally what it is. It's like and I agree with you. Like, I think what we have to do is, as an industry, and I often talk about this in my niche industry around identity a lot as well. We did a piss poor job explaining to people what money was. If you kind of really dig into, yes, it built the arts, it built kingdoms in Italy back in this 1700s, but it was also a measurement of oppression and a measurement of not inclusivity. And if you ask, I don't know, anybody who to me would be a potentially pretty smart person on another field, they often look at finance or capital markets or any of these things and go, don't really get it. And it's not, and somehow we think it's okay. We think it's okay that people don't get how value gets measured on an exchangeable fashion. And I think you're totally right on the fact that it is our obligation. We talk about financial literacy a lot. So if we're building kind of the 2.0 version of banking, at least, I don't know which number to put it in, shouldn't we explain to people how this technology works? And then it goes back to my favorite topic around their data and around sort of their identity and who do they want to trust to safeguard these things. And I actually think this is an opportunity for banks to change the game. How do you use an institution that has been historically trusted to be the guardian and the discretionary manager of what most people would call their most valuable asset, which is measured around money or their house or their kids' education? Couldn't they be the discretionary manager of these other things?
Exactly right.
That's a bit of what you're trying to build at Axway.
Absolutely, absolutely.
The foundation.
The capital T trust, right? So let's sort of wheel around to that. The fact is, let's call a spade. Banks make money from this lack of financial literacy. That's why they have financial advisors. That's why their products have a lot of fine print. They really have to struggle to balance that opacity on the one hand, which much of their existing business is sort of based on, these small fees, small
that
percentage
adds up to billions.
Knowledge to building their buildings and hiring their staff and innovating, doing the innovation theater you talked about.
But it is
to what the fintechs are offering, which is fundamentally a more transparent, more consumer friendly, more open view of finance. In fact, if you look at challenger banks and startup fintechs, they often use as marketing tactics pointing out how opaque and closed and hidden banks are in their fee structures. And they say, we're not, zero fees, and open it up and you can see every line, and we're honest and we're trustworthy. So I think that banks have to acknowledge that consumers are starting to become more financially literate, and it is in their best interest to help them become so. And that with that comes a more transparent environment where they are going to have to find new ways of making money. Again, let's call a spade. They're going to start losing revenue lines in areas where they did make them off of this sort of opaque proprietary products, and start to find ways of generating money through services, through advice, so on, and being part of these ecosystems and creating scale. That is a mindset shift that they're just going to have to make. And this brings us to the trend of history, the arc of history, if you like. This is happening whether they like it or not. There seems to be this mentality among large banks, especially, that says, oh, I control the clock here because I'm one of the masters of the universe. I control the money supply. And meanwhile, Facebook is opening up types of financial services. Amazon has over a dozen different financial services. Google has partnered to offer a bank. Apple's got a card out already with Goldman. One fintech after another is offering me all sorts of ways to do stuff. And then, if that wasn't enough, really should be enough, but it's not enough for them, apparently. Here are wholesale new forms of currency that aren't even based on nation states or central banks. And here are now derivative distributed financial products built on top of these non-fiat currencies, which allow me to do incredible new things, the equivalent of which would be nearly impossible with your existing banking systems and across your existing banks. I'll give you a material example. I challenge anyone out there to try this. Go find yourself something that allows you to keep multiple currencies, easy use case, right? Multiple currencies in one app, so that I can see USD and Euro and whatever other currencies I've actually got a smartphone in one app. And then I could just like drag from USD to Euro, and it'll just give me a good exchange rate and convert it. And I can move that money, say, between bank accounts. Easy, right? Virtually impossible. You will not find something that can do that. It'll be some sort of bespoke credit card that is in a particular region and charges exorbitant fees. And certainly it won't work across institutions in multiple countries. But if you Google multi-currency wallet, you know what you'll get? About 1,000 crypto wallets that let you do exactly what I just described in seconds for no money. So when banks ask me, whoa, open banking is a threat, I don't want it to happen, I like my walled garden, I tell them, guys, open banking is not a threat. It's a moat. You should be terrified. This is the only moat you have left. If you don't get your act together and form some sort of basis of standards and cooperation on which the Facebooks and the Googles and the Amazons can work alongside the JP Morgans and the Goldman Sachs in an open, transparent, standard way where they're not building fiefdoms, you are going to be crushed. You are like stowaways on a beach arguing about what kind of shelter to build when there is this massive tidal wave about to hit you. Get your act together. And I find it really telling in the US more than any other region. The US almost famously now is a laggard in open banking in the context of they don't have a standards regime. Now, there's wonderful organizations like the FDX and others that are working towards a common standard for the US, but they are decidedly market driven. When we speak to US banks at Axway, it's fascinating to hear their reaction to open banking, and I would say it's relatively recent. They, of all regions, are starting to understand that it is a moat. The discussions around, oh my gosh, we don't like open banking, it's threatening our revenue, are largely over. And the context in which they are over is, oh my God, Facebook and Google and Apple are coming for us. And we better come up with a way to level the playing field. Another great example is in Brazil, where Facebook tried to introduce an early version of Libra. The Brazilian governments, on the back of their fast payments regulation and open banking regulation, said, no, stop. You're welcome to play here, but you have to follow the same rules as everybody else. So they pulled Facebook into a room and said, no, we're fine with your WhatsApp payments. We welcome it, but you have to follow our PIX regulation and you have to follow our open banking regulation. So a great example of using open banking as a way to level the playing field, not just across the big banks and small banks, but across the big banks and the technology giants that are these days a lot bigger than they are.
I'm pretty proud of my Brazilian descent and the nascent behind that legislation that happened, and kind of that understanding and acknowledgement that this is not about big tech versus bank versus whatever the hell is going to be providing financial services in the future, or what will be financial services in the future. Is about some set in standards so you can drive transparency, efficiency into an economy. The thing that fascinated me about some of the comments you had around there is I actually still challenge a lot of these fintechs and a lot of the challenger banks. I've yet to meet somebody who's really blown my mind in the sense of challenging what banking really is. Not to say they haven't done it with an amazing user experience. Hey, they're digitally nascent. You would expect that. We have better UX designers, perhaps understand empathetic and privacy by design models and accessibility. To me, that's like, come on, guys. This happens in entertainment, this happens in gaming. I think we really need to ask ourselves when we talk about the challenge to financial services, not only beyond, and I love your moat comment in terms of this might be your only path to actually being able to compete and hold others to the same standard of transparency, information, consent, some of the basic parameters for you to trade, kind of like we're back in the market days of saying, is the goat worth the water, worth this thing? How do you measure each one of those? Which I think it's still far from the conversation around DeFi and some of these decentralized things. I think the thing that interests me is one of the things that banks have been able to do or required to do when you look at the financial crisis and sort of how this has transcended ever since is around liquidity management, and it's around reserves, and it's around ability to settle and having cash available. The thing I find interesting that I think will be in some of the next legislations to come, it's a lot of regulatory mandates around what is the future of treasury when things are in real time. And I don't know if you've played around, but I've been playing around with some of the crypto wallets, which do have some incredible features. But when you actually look at how much, we're going back to economics, like supply and demand does change the cost of a transaction around miners. So I often question them, okay, if this is a real, true, open infrastructure, then how are we going to regulate the miners, or how are we going to regulate the supply and demand factors? Are we going to get back to supply and demand cartel days around, you're right, we're in the nexus of catching up effectively to the digital transformation that has happened around financial services.
And that's the thing. It's happening around you every day. Crypto has now gone mainstream, famously. We now have a couple of real central bank digital currencies, not just in the Bahamas, but the digital yuan has now gone live. The US has announced plans.
Brazil is talking about it.
Brazil, Mexico has incorporated crypto into their regulation. The new president of the United States is talking about how do you tax crypto gains.
That was pretty great to see. At least to bring people's attention to be like, we're not trying to exaggerate here.
That's right.
You're somebody you might want to listen to if you don't want to listen to me.
But then out of that, you see reactions like, oh, this is just like in the 1930s when the US government seized all of our gold. And you better get it out of exchanges because President Biden's coming for them, and put it on crypto wallet hardware and hide it under your mattress. I like that you said we come full circle, right? We've come full circle in so many ways. The history of the United States is fascinating in that regard. It used to have over 120 currencies, and you would travel literally from one town to the neighboring town, and the piece of paper changes, and the currency you'd have to carry around with you changes. That was a multi-token world, and now it seems like we are moving towards a multi-token digital world.
Yeah.
Banks really have to find their place in this new world, but trying to say that it's not happening is very short-sighted. It most clearly is. So are you going to let people keep thinking that this is like the government coming to seize your gold? Or are you going to try and educate the public a little bit and say, no, this is something we're doing deliberately. This is the building of a new kind of economy, and we're going to put the support structure and processes and methods in place to, whether it's treasuries, liability, consent, the legal framework to be able to take someone to court for losing data or losing breaches or other kinds of breaches. All of that needs to be put in place. Effectively, as a technologist, you could say, we need feature parity with the existing financial system. So you need all of the same liquidity and controls and legal framework that you have today for banks who work under the current system, but still with support for multiple types of currencies, multiple types of institutions, embracing common standards for things like agreeing to the sharing of data, tracking of consent. Until you have that common set of standards on the technical side, but also the common legal framework, it would be like every bank today. The US has something like 7,000 financial institutions. If all of them set their own liquidity rules and their own reserve rules, and for sake of argument, let's say printed their own type of bank bucks, and there was nobody regulating them, you'd have complete chaos, right? The US has been through that before, and now they're seeing the digital version of that now. And of course, it's not just the US, it's everywhere. So again, it comes back to accepting that this is happening and deciding where you're going to play. Sticking in this state of denial that says, we don't see this happening, it's not significant, people aren't going to want all these new features and capabilities that is offered to them. I think that's going to be very painful for them as they watch it continue to unfold. And it does come back to that capital T, trust. Open banking came out of the 2008 financial crisis. And you could say that it's not direct correlation, but if you listen to the European legislators arguing about it, certainly sounds that way.
You can kind of get there. I hear you.
It's not tough. Crack open YouTube, type in PSD2, and watch the debates. And it becomes very clear that austerity in Europe, the bad results that they got from the 2008 financial crisis recovery, that very much led to PSD2, which ultimately led to open banking standards. If you want an example of the flip side, Canada, where I am, dealt with the financial crisis very, very well. And guess who's probably last place in open banking? And guess what the banks say? We did so well in the 2008 financial crisis. Don't touch it if it ain't broke. Everything's fine. You really don't need open banking. We're excellent stewards of the economy. Leave us alone. So to me, that's not a coincidence that the areas that were hit the hardest by the 2008 financial crisis are the biggest adopters of open banking. And that's because the 2008 financial crisis was fundamentally a crisis of trust. That's what made it unique relative to other financial crises. Everybody got the distinct impression that there was a different set of rules for the banks than there was for everybody else, and that the bailouts effectively, in whatever form, went into the bank's pockets because they were too big to fail. Not my term, a term used by, I can't remember which banker, but a prominent banker who essentially said, you cannot shut us down. That was unacceptable to the European legislators and to many people whose relationships with their banks were scarred forever. They basically lost any kind of positive relationship that they had with their banks. They decided, oh my gosh, these folks are crooks and I don't want to deal with them. And in many ways, that vulnerability is what fintechs lean into. They say, well, you can't trust those guys, so trust me. I'm trustworthy, they're not. So the challenge to banks becomes, well, how do I get that trust back? How do I embrace the consumer and make them feel like I really do have their best interests at heart? Well, it comes back to what we talked about at the beginning. You have to accept that you are not all things to all people. You have to accept that fundamentally, you thought you were in the money business, that you were in the business of selling credit cards and mortgages and loans. You're not really in the money business. And in a weird sort of way, you never were. You're in the trust business. Banks exist because people trusted them to hold their deposits so that they didn't have to keep them under their mattress. Today, a lot of people feel like they're safer keeping it under their mattress than they are giving it to banks. You're in the trust business. And the way that you regain that trust is by showing them that you are still the best place to keep the things that are valuable to them safe, and to help leverage those things that you're keeping safe to give value back to your customers. Just like you did with money. Yeah. Except the vehicle that you used to do this with, that you used to sell your trust with, has changed. Used to be money. Now it's data. Banks have to understand that you're still custodians. You're still who I want to go to help me keep my valuable stuff safe. But my valuable stuff is not money anymore. It's my financial data. It's my relationship to all of my different crypto tokens. It's all the things I do every day that might be valuable to turn into some form of genuine crypto and then reinvest back into the ecosystem. How can you help me do that? So I think once banks realize that they're in the trust business and that fundamentally they are there not just to let me share my financial data, but to help me share it, just like you used to help me share my money with other institutions, then they're going to be on the right road, leading them into the inevitable future, which they cannot control. But if they play their cards right, they can be a part of.
I hope that happens. I hope they
Me too.
realize. I do. I hope for the greater good of society and all the brilliant people that we both know that work in some of these large institutions realize that it's just so much more than just even exchanging money or value. It's about, as you said, being the vehicle for in which I know that if I do that, whatever that exchange is, that is being safeguarded, it's being protected, it's being looked upon. Those are the things that when I bought a mortgage, I got a home. Like I wanted a home, not the mortgage.
That's right.
But I think you're right. It's a ginormous mindset shift.
And those banks that are worried, we're going to get our lunch eaten. Let me ask you a question personally, honest answer. Would you have gotten a mortgage from Facebook?
Probably I'm not the best person to answer that question when it comes to data privacy and Facebook, but probably I think that the average person who has a relationship of trust with a social platform, why not?
Do you think that
it was easy and it felt fair and it took my history, my actual history, contextual history into account? I probably would. I've immigrated 5 countries in my lifetime, and I always become a nobody every time I move, as if like nothing happened. And then you go look at the treaties. These are UN nations. You could actually know that the banking system in this country works. Why am I back to zero? And that's like a tiny example of what I think that contextual or transient information. It's effectively a lot of banks' inabilities to ingest, track, understand, and leverage this data effectively of me. So maybe Facebook would have been somewhere that likes Facebook would buy a mortgage.
Let me ask you 2 follow-up questions. If something went wrong with your mortgage and you needed to get recourse, to get help, to call someone, how much faith would you have that Facebook would pick up the phone?
Not a lot.
Not a lot. Let me ask a 3rd question. If banks got there and they could offer feature parity to Facebook, I agree with you. Facebook would likely give you a way to make it very convenient, look at your existing records, and make the credit process wonderful. But let's pretend that banks can do the same thing. So let's say they could both offer you a mortgage and the credit process would be roughly equivalent. Who would you get a mortgage from? Facebook or your favorite bank?
Probably my favorite bank, given the fact that I would have never gotten a mortgage with Facebook. But I get your concept, is the idea of how do you get there? How do you use technology to get there?
That's right.
And it's no longer an excuse. It's a matter of infrastructure. And I think a lot of people don't give some of the credit where credit is due. A lot of the legislative infrastructure and regulators and even maturity of their technology, real-time payments has evolved, right? So when you look at RTGS in a lot of countries, it's completely different. I do a lot of work in the Middle East and Brazil and different places. And I look and say, all right, this is a challenge if I'm a global big bank, but how do you then lead with education, not only to your stakeholders, to your mindset shift, but also to the regulators so you can help, not protect your moat, but inform the challenges around it so we can catch up to humanity. It's about time.
Exactly. And I would end on the note that don't be worried. People still trust you more, banks, than they trust the Facebooks and the Googles of the world.
Agreed.
But you're running out of time. Leverage that trust. Give the customers what they really want, but make sure that when they want to share their data in a secure way that gives them legal recourse with a partner that has their back and knows how to make sure that they are protected, just like that's been you for the last 1,000 years. It should be you in the 21st century, but you have to get there.
I agree. I hope we get there. And I cannot wait to see Canada, as an also proud Canadian, get on the bandwagon. There's amazing work happening around the Open Banking Initiative. And I'm so glad to have you and some other representatives of Canada and Axway as a global organization trying to make this happen, be part of the open banking community. Cheers to open banking being a reality and to open X or world, whatever we decide to call it,
open everything.
Being a humanity we use technology for.
Indeed. Listen to the show, Mr. Open Banking. And
do your plug. Absolutely.
Yeah, there's my plug. And also got to plug the other one. If you want to see some amazing things happening in the open banking space, keep a close eye on Axway. We're about to bring something pretty amazing to market. Thank you so much, Bianca.
You're so welcome. It was a pleasure talking to you, and I am sure we'll be talking soon again. Thanks everybody for watching. All the handles of Eyal and Axway and Mr. Open Banking will be here and the open banking community for you to follow. And we'll see you next time.